Welcome to Money Moves, presented by F&M Trust. My name is Matthew Berger. I'll be a regional market manager with our investment and trust department, serving Franklin, Fulton, and Huntington counties. And I'm joined today by my colleague.
I'm Erin Sunday. I'm a relationship manager, also with the Investment and Trust Services Group of F&M Trust, and I serve the Cumberland and capital markets. In this segment, we want to start the conversation around capital gains. So Matt, can you tell me a little bit about what is going on currently and what is being proposed?
Absolutely. So buried in the Biden administration's tax proposals are very significant changes that they want to make to how capital gains are charged and how they're paid. So before we jump into that, let's go ahead and just touch on some very generic, how do capital gains work now? So capital gains are a tax on the appreciation of an investment or an asset that you've held for a period of time. A simple example would be, let's say you bought a stock for $100 and it has grown to $150. You choose to sell that asset. You have $50 of capital gains there that now are required to have some taxes paid on them. Now, if you've held that asset for less than a year, that would be considered short-term capital gains. Longer than a year would be long-term capital gains. Now, depending on how much income you have, you could be charged anywhere between nothing if your income is less than $40,000 a year, to if you're in the highest marginal tax rate bracket, you could be charged currently 20% on those capital gains from a long-term capital gain perspective. The Biden administration wants to make very substantial changes to that. The discussion that the White House are having is that they wanted to propose a top marginal rate of 39.6% on those long-term capital gains, almost doubling that rate, which has been a very significant change, Erin.
Right.
But I know that the House Ways and Means Committee here in more recent weeks has recommended a more middle-of-the-road change, we'd say.
Right. They want to change it from 20% to about 25%. So that is a drastic reduction from Biden's plan.
Absolutely. So that's a great reduction from the Biden administration, the White House proposals that candidate Biden had been running on and had proposed. But it doesn't just stop there. He's also recommending, or what the ideas the White House had, were to also get rid of what's called a step-up in basis. So this is very significant. This is a piece of the tax code that has been debated for 20 or 30 years. They've been trying to remove this. And what the step-up in basis is it's basically if you've owned an asset that has capital gains. So let's go back to our simple example of our stock we bought for $100, now it's worth $150. The owner dies. Those capital gains would be washed away. So as of the date of death, so if it's worth $150 as of the date of death, all those capital gains disappear. And the person who inherits that asset, that stock in our example, if they sold it immediately, they would not owe any taxes. Well, this is very different than what the Biden administration had been recommending. They were looking to change it to not only is that step up in basis going away, but they want to charge you those capital gains at death. So instead of having the taxes disappear, the taxes actually get realized. And this can have very substantial changes on a lot of our neighbors, and particularly our business customers locally.
Right. They really feel that this is going to impact our small businesses as well as our farmers out there, that the incurment of this capital gain tax at death could put a lot of small business and farms out of productivity. Real quick, Matt, we talked a lot about long-term capital gains. Is there any changes to the short-term capital gain?
Short-term capital gains are traditionally identified as a income tax. So we will be talking about in a later segment, maybe some very significant changes to the income taxes as well, and looking to raise those rates on the wealthiest Americans.
And what would you say are the ramifications of it going from a 20% long-term capital gains tax to a 25% long-term capital gains tax?
Usually say that the higher a tax rate is, the more benefit there is to either not engaging in that activity. So some people may choose not to sell assets. But you could also see great benefit in making charitable gifts of those assets for which those taxes are due. So I would imagine we're going to see a lot more attorneys recommending charitable remainder trusts and different estate strategies such as that.
Another ramification is that we could see a lot of individuals taking the capital gains off the table right now within 2021, instead of waiting for that capital gains tax rate to increase to 25%, which could have some impact on the markets.
Yes, we could see a sell-off, maybe perpetrated by these lower rates that you could realize today, instead of waiting and seeing what those tax increases are likely going to be.
Interestingly enough, this tax that's being proposed really only goes after what we consider the merely rich, not the fabulously or the uber rich. However, in the Senate Finance Committee, there are some bills that are being proposed. One is a one-time surtax on those billionaires in order to collect some of that wealth for tax revenue. And another bill also that was introduced goes after annual levies on the wealth rather than the income of these super or uber or fabulously rich individuals. However, we feel that both of these bills will not go through because of the constitutionality of both bills. It really is targeting one specific class of individual for a certain tax.
In light of these proposed changes, we do recommend that you take a look at your portfolio and have discussions, not only with your investment professionals, but other professionals in your life, be that your accountant, whoever you seek legal guidance from, because these changes could have a very significant impact on estate planning decisions and also realization maybe of some capital gains here before the end of this year.
Yeah, we really want this series to be a springboard to you having conversations that are in your best interest.
So thank you very much for joining us on Money Moves, and we look forward to seeing you in future segments.